Hi guys, I'm Dan, this is Kai. We are the directors at Crescent Mortgages. Today we're going to be talking you through the costs incurred to buy a property. Now, this is really important because if you don't save and prepare for these costs, then it's not going to be possible to buy a property. So you need to be prepared in advance, and they do vary significantly depending on who you are and what you're buying. So we're going to give you some information and make sure you're fully prepared for when you do start to look for a property. Let's jump into it. Before we jump into it, just to remind you that we are mortgage brokers, aren't we? We're not YouTubers, technically. So we are here and we can assist you with your mortgage. If you're buying somewhere or you're thinking about buying somewhere, you want to start the process, get in contact with us. We can do kind of an initial consultation, take some of your basic information and make sure that you're ready to start the process. And obviously we can assist you with your mortgage application once you've found somewhere. One of the first questions people ask us is, what are the hidden costs? I think people are terrified that they're going to get halfway through the process and then there's going to be, a legal fee or a mortgage fee pop up. So we just want to make sure that we've given you kind of an overview of all of the potential fees that could crop up, just so that you are fully prepared. It's not so much a fee, but it's a cost. What's probably going to be the biggest outlay, which is
your deposit. If you're buying a property, you will need a deposit in 99% of cases, a few exceptions, but generally you'll need a deposit. Ideally, at least 5%, and every 5% incremental increase on that will be better. So 5%, 10%, 15%, 20% deposit is a good place to start.
We've got a new video coming out, if not already, outlining what deposit you'll need, and it's going to get into the details of the benefits of putting down more, how much you might need, and beefing out in a bit more detail. So make sure you check out that one if you're really not sure what kind of deposit you're going to need. Ultimately, you'll have that conversation with your mortgage broker when you call them, and they can kind of talk you through the options. But absolutely, deposit is generally going to be the biggest outlay. Often the second biggest, and these first two are generally mandatory. Some of them aren't, but these two are going to come up. The second one is your legal fees. So you will need a solicitor or conveyancer, you might see the term conveyancer, to oversee the purchase, and there's a fair bit of work that they need to complete. They've got a really important role in the process. If you use us or you use a broker, they'll normally be able to recommend a solicitor, but you can use whoever you want as long as they're on the lender's panel. But again, don't just go for the dirt cheapest. They do have a really, really important role in the process. Depending on your specific circumstances, I would say that allowing around £2,000 for the legal fee is probably about right. Could, depending on the quality of the solicitor, it could be more, could be less. It can be a bit more expensive if you're buying, a leasehold property, let's say a flat. Help to Buy or lifetime ISAs, there can be an extra fee for that.
Gifted deposits.
So there's a few.
Buy-to-lets.
Yeah, correct.
There can be quite a few.
But those, they're not going to double or triple the cost of the legal work, but they would also dictate whether there's an extra couple of fees and the total amount. But if you allow around 2,000, that would often be there or thereabouts.
And that would include a few of those that we just mentioned. Normally, some of them would be included.
Exactly. I guess the legal fees leads us on to your stamp duty. So we don't give tax advice, and if you look online, it's quite easy to get some info there. But stamp duty is essentially the tax that you pay, more tax, when you buy a property. It does vary across the UK. Obviously, we can assist you across Great Britain, can't we, with your mortgage. We're not just based in our specific area. And there are different thresholds. So, for example, if you're a first-time buyer buying under a certain threshold, you may be exempt from stamp duty. But again, if you go online, type in stamp duty calculator, do a quick bit of reading, you should be able to quite quickly work out if you're going to be liable for stamp duty or not. The next one is your mortgage valuation.
Don't get me. So mortgage valuation. The lender, as part of the process when buying a property, the lender will value the property. They have to value the property to make sure they're happy with it. If nothing else, they're just making sure that they are happy with the property, and most of them, in all honesty, do that for free now. There's a couple that charge, and it might be 100, 200. It'll be a relatively nominal fee as far as the sort, sums of money we're talking.
You're unlikely to pay more than £100 for a valuation, aren't you? And it could be free. So that's minimal. You don't particularly need to plan for that, but that could crop up depending on the lender. And then I guess that's the mandatory. The valuation is mandatory. They have to do that to agree the mortgage. And then the similar terminology, but you'll also hear survey. And a survey isn't mandatory, it's at the client's own discretion, isn't it?
So that one is for you. There are a couple of different surveys that you can go for. You can essentially upgrade the valuation, if you will. So you can get either a home buyers, often called a home buyers, or a full structural survey. Those are the two main ones you'll see. And the valuers then are acting a bit more on your behalf, not necessarily the lenders. So they're there to provide you with more detail on the property. Certainly a structural one might look at the quality of the roof and damp and all sorts of things, and they will try to give you a better picture of the condition of that property.
Basically make sure that you're not buying a property which has major structural issues or issues that you weren't aware of, because once you buy that property it becomes your problem. So you don't have to have that survey done, but it's kind of an insurance policy. You are triple checking the quality of the property before you buy it. But if you do choose to do that, number one, we don't encourage our clients to do that until the mortgage is fully agreed. Just because if you pay for that and then the mortgage is declined, you've kind of wasted the money on it, but that is your call. The cost of the survey depends massively on how comprehensive it is, how big the property is, the area, but a home buyer's report could be, I don't know, £300, £400, £500. Structural surveys could be close to 1,000, could be more. Again, but it does vary. You can kind of shop around in your area. It's not mandatory, but that is a survey if you do want to look at that as well. Especially maybe with older properties, you might be more inclined to do that. I guess the next one, which is, these are the fees that people seem terrified that they're going to pop up as hidden costs. I see a lot of people kind of, where are the fees? I just want to make sure that I can see everything. So it's your mortgage fees, isn't it? Your arrangement fees and booking fees.
Booking fees are not completely gone.
You don't see many, do you?
You don't see many. These historically were upfront fees, £100, £200 to pay to book the interest rate. But that has kind of almost completely gone from the market, to the point now where I wouldn't even tell you to factor that in. I wouldn't worry about setting aside £100 or £200 to book an interest rate. Almost all of them will let you do that for free now. The one that will be more applicable is arrangement fee, product fee, lender fee. They all call it slightly different things, but effectively it will be a fee attached to the mortgage product. Lenders will have a multitude of products. Some of them are fee-free and will have higher interest rates. Some of them will have a fee of somewhere in the region of £1,000, but much lower interest rates. And depending on the size of your mortgage, will depend on which one's better for you. That'll be part of the conversation we or a broker would have with you. But assuming you do take a product with a fee, if it was good for you, you wouldn't pay that fee up front. You'd normally add it onto the mortgage. Once your mortgage completes, 3, 4, 5, 6 months later, generally there's nothing stopping you calling up on day one of your new mortgage and paying off that £1,000 to stop any interest accruing. You can leave it on there as well, completely. Although it would then accrue interest for as many years as it's left on there.
You can pay it up front.
You can pay it up front. The risk is it's normally non-refundable. So if you paid it up front...
Although that's starting to change, isn't it?
It's becoming less.
But I guess that the main point is, yes, you might pay £1,000 arrangement fee to get the best rate, which is common to get the best rates, but because that can be added onto the loan, you don't necessarily need to factor that into your pot of money that you're covering, your costs at the start of the process. But if you've got the money to pay it, you are welcome to pay it. There's not really any hidden mortgage fees. There might be a mortgage account fee that you pay them to close the account at the end in the future, but it's not normally, particularly big. And again, it is in the future when your scheme ends.
It's less relevant.
The really common one, which I guess is applicable for us because broker fees. It probably is sensible to get your mortgage through a broker. They have all the tools, they have the contacts, they have the ability to shop around the entire market, which you just can't do. You can't have a meeting with every single bank. Most charge a fee, some are fee-free, such as ourselves. So there's no catch. Every broker is paid a percentage of the mortgage right at the end of the process. Most will charge you a fee on top. We don't know where we'll go in the future, but depending on how easy it is to maintain it, but we will endeavour for now to stay as a fee-free broker, won't we? So if you contact us now, there will not be any broker fee. There's no catch. You'll get the same 5-star service. We just try and survive purely on the payment from the bank rather than charge an additional fee on top. But depending on the broker that you contact, broker fee could be £1,000, could be £500, could be £299, but there is often a broker fee with most brokers. Anything else as far as potential fees?
Moving house. If you're buying a house and you live in one already, you have to move your stuff from one property to another. So things like your moving vans, possibly, I don't know, a crossover if you're renting, where you might rent for a month and pay for your mortgage. Bits like that at the end, the logistical bits.
Yeah, and they won't apply to everyone.
No, exactly.
But depending on how far you're moving and whatnot. If you're buying, you won't pay for the estate agent selling the property. That's paid for by the seller. But if you're selling your current property to move into the new one, you will have to pay the estate agent. Unless it's a private sale, you will have to pay the estate agent to sell your property, and that can vary quite drastically. It can be a fixed fee. Some of the online ones are free, but then you may have to pay for some of their other peripherals, and the service isn't necessarily as good.
Traditionals, what? 1.5%?
Or it could be a percentage of your sale price, So you'll obviously shop around with agents, but don't forget to factor that in if you are selling. I don't think there's any kind of other costs that are likely to pop up.
No.
So that should, if you factor in all of those, then you should be good. As always, if you're thinking about buying, contact us directly so we can check that you're eligible, make sure we've not missed anything and tailor the advice to you, and we will see you next time. Thanks a lot.